Hello, this is Jonathan Jardina, and I was making this video because I have noticed that a so-called rare technical event happened on Friday, which happened to also be Cinco de Mayo, a rare technical event in the stock market, and it's called a 9-to-1 up day. And for people who aren't familiar with my financial blog or with Martin Zweig and his work, um, to find what the volume ratio is on the stock market. You could go to Wall Street Journal and find the New York Stock Exchange numbers every day. And so every day since February, I've been, taking the up volume, dividing it by the down volume. And I was surprised Friday. I was looking at the numbers and I saw that it might just be 9-to-1, and so I calculated it, and it was right above nine, and I was like, wow, that's because this is rare. When Martin Zweig put out his book in 1986, um, this type of event only happened less than twice a year, and we're gonna get into what it means if two of these happen within the same month or within weeks of each other. It's very bullish, and it's been confirmed that um, you're likely to make money if you invest when these type of events happen in close succession. So it's significant that one of them happened. I crunched the numbers again to double check, and it's true. It was a 9-to-1 day on Cinco de Mayo, 2023. Um, but again, so I found the, the media wasn't covering this. So I looked to see if this had ever been covered by the mainstream press, and I did find a article by on MarketWatch's website, and it was behind a paywall, but there's an archive.org version that you can actually read. So I'll put the link to that in here, and I believe I put the link on. No, I didn't. I didn't put the link on my blog yet, so I'll be sharing it here first. And so the article says, he says, 9-to-1 day. It refers to the volume of all NYSE, New York Stock Exchange, listed stocks that go up on a given day. Um, the journalist says, according to Martin Zweig, who helped to develop this indicator several decades ago, such a huge imbalance of up volume over down volume is a um, significant sign of positive momentum. A significant sign of positive momentum. But here's the caveat: um, a single 9-to-1 up day by itself has not always been a bullish event. Okay, so there are false signals. So you need to wait for another 9-to-1 up day to happen. Um, and wait a few weeks, and if another one happens, then yeah, that's very rare thing, and which is good if you're investing in stocks, and it's also good for the Zweig method because shortly I'm going to just talk about my blogs before Cinco de Mayo, and how I was very much doubting the method and wondering if it still worked. I mean, because it's been around for probably close to 40 years, if not 40 years, and but it was tested in 2007 by professors, and they showed that it's there is something to this. It's not just it's not like just magic or anything. Um, so here's just a summary of the two blogs that I put out on the Patreon page, which I or the unless there's a sell signal or a buy signal, I release the blogs without any paywall or anything. But of course, as I'm saying now, there was a buy signal. Like I guess it's not a strong one. A strong one would be if there was two 9 to 1 days in close succession, but there was. I consider it to be a buy signal, so I put the Fridays. No, actually, it was Saturday when I actually got around to crunching the numbers and publishing it. So, but I put that behind a paywall. But it refers to the events on Friday because there's no trading on the weekends or holidays. So it was referring to Friday, and I was not expecting. I didn't even bother uh, publishing anything on Friday because I didn't think that it was gonna be a big deal. Like, because and the reason why is because the trend before that was down, and and it made me even question my method and wondering if I had been giving people bad advice by telling them to buy because I told them to buy on March 31st because there was another sell indicator which we call the value line indicator, which you could read about um, on my site and on my main page, oldbluffer.com, or Martin Zweig's book. It's still worth reading. So the first blog I said, which I call it's called Deja Vu. I said, so far using the Zweig method, we wouldn't have lost any money. So that whether or not whether or not we would lose money would be if the average Dow Jones Industrial Average went down below 33,274. And I was hoping, halfway hoping that we would get like a sell signal so I could tell people just to, forget about it, and not put themselves through this because it just seemed like, if they held on, they would lose money if they held on. So I was trying to give people a way uh, an excuse to sell without like totally getting rid of the system completely because you don't want to totally get rid of the system and just go with your emotions. That's not good. That's not a good strategy at all. You need to ignore your feelings and just look at the market. Study the market. Don't study the news. Don't don't worry about what Congress is doing. Look at the market. Um, and look at the indicators. So I said earlier the week, I said if the value line goes down to 531, or no, if it is 531 on Friday, then sell. But um, it did go down to 531 on Thursday, but it didn't stay. It didn't stay on 531. So in a very short post from Thursday, I said earlier this week I wrote the value line would have to fall another 10 points and be below 531 on Friday. Today, I said Thursday. Today, the value line is at 531. But I said it's not Friday, so I said I've been saying this week. Unfortunately, you have to hold. You can't. There's just no sell. The value line can't give a sell signal until the end of the week, which is usually Friday, unless it's a holiday. Um, and Friday was a holiday, but it wasn't like a day that the type of holiday where the stock exchange is closed. Um, and I was trying to justify the Zweig method, kind of um, kind of saying yeah, if you lose a little money, you still have a way out. You don't have to wait until the value line indicator. You don't have to wait until the value line index drops 4%. You could wait until it drops 3%. If it drops 3%, um, and it's at that level on Friday, you could sell. Like Zweig's method is not like a strict dogmatic thing. You could. I gave reasons why you don't want to use a 2% rule because that you would get mixed signals. But like a 3% rule, yeah, if you really want to sell and it's down 3%, well, go ahead and sell. Make it 3%. Make that your indicator. Cause I don't want people to lose money, but like I said, the only way to not lose money is to just not invest at all. So, but in that case, you never get to gain anything. So, I still think the Zweig method works. Um, we'll find out if the market's up. We'll find out if the 9 to 1 day was a false signal or not. And so check out the links and check out the website. And I just wanted to. I know I went on too long, but the mainstream media is not covering this, and it's important, and especially if it happens, if we see another 9 to 1 day soon, that's a big deal, and the like the CNBC, the financial Fox Business, they should report this. Like they want to fill some airtime. Like this is like been proven to be statistically um, significant. Like there's a likelihood there's a likelihood that the investments will rally a big deal. And you can see from the archive.org article tells you what kind of returns you can expect when you have money sitting on the sidelines, and when you invest it at the right time, as opposed to just buying and holding, you can see some big returns. So um, check it out. Look up 9 to 1 days, and you and I don't think you'll lose money. If I thought you would lose money, I would feel very guilty. But this is science, or close to scientific as an investment system is. So um, check out the links, and next week I'll have another video out. All right. Until then, good luck, and stay safe out there with your money.